All right, welcome back to another video. Today we are going to be taking some examples based off what I've been explaining lately. Lately, we've been looking at divergence, and in the previous video, I explained in details what divergence is and how to make proper use of it, how to find it in the market, and how to trade it. Okay. So today we are going to be taking some examples. If you've not seen the video I posted, the previous video I posted, go to YouTube or go to the Telegram channel. You're going to find the video. It's about 30 minutes long. It was posted on, I think on 9th of September. That is when it was posted. So after I posted that video, I haven't, made another one until today. And the reason is because I want the video to go around, because there's just too much information there. And even those who were able to watch it the day I posted it, they will still need time to process all the information and try to figure out things on their own. Okay, so today we are just going to use this very random chart, and it can actually be seen almost anytime and everywhere. And so let's just start. Let's pick a trend now. Okay, so we are going to be doing this in hindsight just to make it easy. Okay, to make it easy to learn, make it easy to understand. We are going to do hindsight study. Okay, from next week by God's grace, we'll start applying everything to live markets by God's grace. All right, so let's start from here. Let's start from this vertical line here. All right, so looking at the market structure, I can see that I'm not really teaching you how to find trend or how to do your top down analysis or anything. What I'm teaching you today is just how to find or how to see divergence. Okay, so let's say we are trading this and then we see that okay, price has formed this liquidity void right there, and we can see that it is possible that price comes all the way back into that void, but at the same time price also created a fair value gap with this candle. So right at this point, those two areas will be points with S now, points of interest. So this is going to be point of interest 1, and this is going to be point of interest 2. I'm sorry, this particular video might also be long because it is more like a exercise video now. Should I say content? So POI 2. So trading, you are going to be focusing not only on 2 and not only on 1, but also on both of them. You are going to be focusing to see which of the two is going to, displace price. That's what displace. So we can see that when price got to point of interest 1, that was when price went back up. But the question is, how can we figure it out that okay, at point of interest 1, price is going to move in our way? It's simple. All you have to do is to find the swing points. Okay, find the swings. We can see that between this entire range, dealing range, we have our swing low to be this, we have our swing high to be here, to be that high. So we expect a retracement between this high and this low. If you use your Fibonacci tool, I'm going to be using the week now because this is lower time frame. If you use a Fibonacci tool, we are going to see that 50% of the range is around where price, respected. So they did a deep impression into below 50%, which is discount. before eventually going up. Now, we're not going to be using fib 2, or I'm not going to be teaching you how to use fib 2 today. Now, between this swing high and this swing low, we have our dealing range, right? That is the range that we are dealing with. At the same time, we want to see how price is moving towards our point of interest. Like I told you in the last video, I said it is best when they move quickly. Look at the candles, boom, boom, like they moved quicker. It was quicker to get to this point than it was to get to that point from here. So, in short, once price gets to your first point of interest, we want to figure out if price has now formed a kind of momentum shift. That is, a momentum shift from going down to now wanting to go up. Or it has built enough momentum while going down in order to buy it back up. That's the essence of what I mean by momentum shift. Okay. So inside this fair value gap on point of interest one, I'm going to move this to that last candle, this one. Now, I'm going to also do something. Let me just make this may make it a full analysis. Good. All right. So this is our swing high. I can also call a sell stop liquidity. Oh, well. You can also call that a buy stop liquidity right there. So that is our daily range. So between this, oh, the one I wrote earlier disappeared. I wonder why it did the same thing during the last sell side or sell stop liquidity. So between this buy stop and sell stop, we have our daily range, and we want price to retrace in order for us to buy inside that range. We want to buy a discount. So once price gets to your point of interest, we want to also figure out that we have a bullish divergence. Now, yesterday or in the last video, I explained that if you have hidden divergence, if you have a trend continuation market structure, you want to look out for hidden divergence. In this case, we want to buy. That means we are looking for bullish hidden, right? Bullish hidden divergence. So here we have a lower low and a higher low. But if we look at the same exact point on our indicator, which is in this case stochastic, I showed you the settings yesterday. You can see this went way lower than what the price did. So on the stochastic, it is showing us that price went below this self stop, but it did not. Now, what does that mean? It means price has really gone all the way down to build up momentum in order to now fire back up. So if you take a sell, a buy here, how would you take a buy here? It's simple. Go to 5 minute chart. You're going to find a perfect break of structure, a retracement. Now, even if you don't, there's still another one here. Price takes out this high. Price takes out this high here by this move, and comes back right there with that black candle into this bullish order block and also this small fair value gap here, and then eventually started buying. Now, this is known as bullish hidden divergence. This is a perfect example. I like to use divergence, to use hidden divergence. I really don't like using irregular divergence because from the name regular, they are the ones that they are majorly used for trend reversals or retracement, and I don't think anybody likes to trade or catch retracement. We all want to catch the expansion because that's where the bulk of the pips are. But hidden is going to give you a lot of trade setups, a lot of sniper entries, one shot, one kill, you name it. Just master hidden divergence. It works like magic. Now, let's find another point where we could have taken entry. Okay. Another point we had retracement was here. Now, this is I will explain this and this will be all for today. What I want to explain is about stop hunt, right? Stop hunts on retracement. Most times, price is going to come to a point of interest and they will take you out before they finally start moving. And that's how they do it is what I want to explain now. Price retraces, this is your point of interest. They go up a little bit, they come down, take you out and finally start moving. Okay. Please follow my illustration. Good. So this area is where you take your buy here. And you probably set a small stop loss and then you take your buy here. You put your stop loss something around here. You have your stop loss there. You have to take profit all the way. And then price moves a little bit in your direction. Before you know it, one candle just flies down, takes you out. And before you even know it, the market is back in your direction. This is the story of many traders. Now, this is what happens. And this is how you can always avoid to be a victim. Because when stuff like this happen, let me tell you even the evil part. It's something that even me myself, I've had to experience it at some point in time, whereby price comes to my point of interest, I take a trade, then they break that point of interest, and I assume it is break of structure. Then I want a retracement, I take a sell, and then they fly up in my first original direction. Now, let me tell you how to always avoid this. It works all the time. Okay. So my illustration now is that this is a fair value gap. This is a beautiful, perfect setup, right? Price comes into your fair value gap like that. Boom, awesome. You take your buy there. Why? Because number one, there's hidden divergence. Okay, let's do the analysis again. That's your swing low right there. And this area is your swing high. Okay, so price retraces into your discount and then you take a buy. You find your lower time frame, whatever you do, you did it, you take a buy, and you're in profit. Then for no reason, price did all this drop. Now, why did they do all that drop? They want to take out everyone who was able to take a buy. That's it. That's stop running on retracement. So even on your point of interest, price can still hunt you out if you're not careful. And this is why I always advise don't use tight stop losses. Give your stop loss space. It has helped me sell too many times that I'll take a trade, I'm in profit, and maybe some hours after I come back and I see that price spiked all the way to negative and rejected, and now I'm back in profit. And I'll find out that it's the only thing that saved me was the fact that I didn't have a tight stop loss. See, whoever preaches or teach you anything about tight stop loss, it is rubbish. It's not going to help you on the long run. So using a tight stop loss here, even though you had the hidden divergence that confirmed to you that price was going to go your way, from this swing low, take it all the way. Now, look at you enter right here. Look at that perfect hidden divergence. See your swing low here. See how low price went to for that accumulation of momentum. Then eventually goes up. Now, what I want to teach you is when stuff like this happen, let's assume they even take you out, and you think, oh, what if this is a break of structure of this low, and price would now start dropping? No, the only way to find that is when they take you out like that. Look at your momentum, your oscillator. If your oscillator prints the exact same thing, then it is a confirmed break of market structure. But when price break takes out a previous low like this, and you look at your oscillator and you see a regular divergence, in this case, let me draw it for you. This low to this low, right? It formed a new low. But looking at the oscillator, it did not form a new low like that. Boom. When you see it like this, automatically don't jump on any sell. In fact, buy that trade because it is a fake out. They can fake out price, but they can't fake out the momentum. You can always do the real movement, the original movement using the momentum. Now, this is a cheat code, and I hope somebody is going to take it seriously. Now, from there, look at how massive markets just kept flying. Lastly, before we go, here is another retracement. Price comes to this bullish order block right there. Boom. For the sake of clarity, for the sake of simple illustration, let's use this fair value gap, that long candle. Boom. Price came into it, did a little bit choppiness. Maybe I think that was probably Asia session. But boom, look at that blue candle, went back straight inside. Now, do we have a hidden divergence here? Since this is a trend continuation, this is the swing low. So from that swing low to this new swing low, do we have the same thing or we have a divergence? Boom, you have your hidden divergence. See how low price went to, and see how high price stayed. Sorry, the momentum and the price. That difference is your moment, is your divergence. But anytime I see stuff like this, I always confidently take the trade. The same thing here. This is our swing low, this is our swing high, this is our retracement. Look at your indicator, it went lower than the previous swing low. That is a buy, my friend. Okay, so tomorrow we'll have one more, and then that will be the end of divergence. Because after that, we'll now only start using it in live examples and live trades that I will be taking myself. So moving forward from now till the month till from next week Monday or Tuesday till the end of September, any trade I take, either successful trade or not, I'm going to share, make a video before I take it, make a video while it is running, and make a video after, and show you guys exactly how I do it using ICT concept and divergence. And nothing else actually, nothing else. You don't need anything else aside these two because moreover, what do you want to catch if not a you know one important one of all the four elements of the trade setup? All right. Have a nice evening. I hope you've learned something. Make sure to share this video with groups, with friends. Let us build a community. Let us grow together. All right. Talk to you tomorrow. Bye.